Hello guys, first of all, happy new year and welcome back to my channel. If you are new to the channel, my name is Khalifa and I document my journey to become a successful forex trader right here on YouTube with you guys, right? And I've been on a break for some time now, but new year, new resolutions and all that, and I am back. Today's video is going to be about like market structure and educational video, I'll say. So without any further ado, let's dive straight into my trading view. Let me show you guys the video. Let's go. So guys, welcome. Here's my trading view as you all can see. And before we dive into the video, I'm just going to tell you the strategy I trade and all that. Actually, I trade supply and demand strategy, right? And I'm learning the strategy from photon trading. If you don't know who photon trading is, you can go to YouTube and search photon trading, or just go to any browser at all you are using and search for www.photontrading.com and all. You get to know who photon is. And now that's out of the way, let's start the video. Today we are going to talk about market structure as the title of the video suggests, right? And market structure, according to photon and the way we trade, is the foundation of like everything we are doing, right? Market structure is the foundation of everything. If you want to have a high strike rate, a high win rate, a high risk to reward ratio, if you want to be on the right side of the market far more often than not, then you really have to master what we call market structure. And the reason why I like Photon is that he's been able to simplify the structure to so much that if you are able to get your head around it, it will pave the way for everything else, right? So that's just like how important market structure is in the way that we are trading. And there's no one way of trading, but if you really want to be on the right side of the market far more often than not, then if you master market structure, whatever else you are going to throw or you are going to trade with the market structure, and maybe you have success, right? That just goes to show how important market structure is. And with that out of the way, let's start with the video. Sorry. The basic stuffs. We have basic market structure. And market structure, we have two types of market structure, right? Actually, it's three, but we are only going to talk about two because it's those two that we are trading and it's the most important ones. We have bullish market and bearish market structure, right? Uptrend and downtrend respectively. Bullish market structure is called uptrend, and then the bearish market structure too is called what? Downtrend. So if you see a market moving and the movement is to the upside, then that means that that particular market is what? An uptrend. It's moving in an uptrend direction. Likewise, if you see a market and the movement is to the downside, right, then that particular market is what? A bearish market, right? So we are just going to look at the bullish market for now, right? And in a bullish market, when we say that a market is bullish, that means that the market is making or is trending to the upside. In other words, it's making a series of what? Higher highs and higher lows. Higher highs and higher lows. If you are watching this video and you are like, what is a higher high or what is a higher low, right? A high is simply the highest place price trade to before it starts to what? Pull back. Example of a high is here, right? Here price started moving to the what? To the upside, right? And this is the highest place price moved to before it started pulling back to the downside. So this particular place is called what? A high. That's what we call a high. A high is the highest place price trade to before it starts to what? Move to the downside, right? And a low is simply the lowest point price trade to before it starts to move to reverse back to the upside, right? So example of a low in this particular structure is here, right? Price started pulling back from here, then it stopped exactly here, then it started reversing back to the upside again. So this particular place is a what? It's a low. That's what we call a low. So that's why we say in a bullish market, price is making a series of what? Higher highs and higher lows, because the highs are always what? Higher than each other. Let me draw it for you guys to see, right? So if I'm going to draw this, it will be something like this: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high, right? In that order until the market switch what? A bearish trend. So that's why we call a bullish trend, right? And the vice versa for a bearish trend. A bearish trend is like a series of what? Lower lows and lower highs. And you guys already know what a low and a high is, what, right? A low is the lowest place price trade to before it starts to move to, or to reverse. Here, this is a low because price started trading from here, and this is the lowest point that price stopped before reversing back to the upside. So this is what? A low. And the highest point price traded to before reverse, before coming back down, is where? Here. So this is what? A high. That's why we say in a what? Bearish market, price is making a series of what? Lower lows and what? Lower highs. Lower low, lower high, lower low, and what? Lower high, right? That's simply what a bearish market is, right? And in order to what are we going to do with all the information that I am talking about today, right? Stick with me and all those things will make sense in a moment, right? So we have something we call what? A break of structure. And a break of structure is simply when price trades above a high or below a low in a bullish market and in a bearish market respectively, right? So in this bullish market, where it's like, if I'm going to say a break of structure occurred, I'm going to say that price has traded above a high. That's where a break of structure will what? Okay. So example, price started trading from here, and we all know that this is what? A high, right? And price traded all the way to the upside, breaking this high. The moment price breaks this high, that's why we call what? A break of structure. I hope it makes sense, right? And the same thing happens in a bearish market. If price trade below a low, then we will see that price has broken structure to the what? Downside. And here we will say that price has broken structure to the what? To the upside. Now, what we are going to talk about now is the concept of what? Strong highs and what? Weak lows. And the concept of strong high and weak lows is very simple, right? The way we trade, we say that a low's job is what? Is to take out a high, and a high's job is what? Is to take out a what? A low, right? That's why we say, example, this is a low. So this low's job is to what? Take out a high, and this one is a high. So this low has went on and take out this high. That means that this low has done its job. So we will call it a what? A strong low, right? Strong low is simply a low that has what? Done its job. And when we say it has done its job, it means that it went on and what? Break a high, right? And a strong high is a high that went on and break a what? A low. I hope that one makes sense. Let me go over it once again, right? In other words, a strong high is a high that caused a break of structure. Example, in this bearish market, price is making a series of lower lows and lower highs. So before we can call this high here a strong high, then that means that this high here has went on and break a low, as you can see here, and this high actually broke this low. So this high is what? A strong high, right? And a weak low or a weak low is a low that failed to do what? To do its job, right? And its job is what? To take out a low or a high, right? So if a low fails to take out a high, then we'll say that low is a weak low. Example, this low here, if it was trading to the upside, its job was what? To take out a high. And where is a high here? Here is the high, right? So if this low was able to take out this high, then we will have said that this low is a what? A strong low. But that did not happen, right? It failed to take out this high. So because it failed to take out this high, this low here is now what? Weak. So that's the what? The concept of what? Strong highs and what? Weak lows, right? Strong highs and lows and weak highs and lows, right? I hope that one makes sense. After all that I've said, right, I'm going to clean all this one. Then I'm going to draw one giant structure so that we will make sense of we will put everything together so that it will make sense for you guys, right? So let's get rid of this one. Yes. So guys, let's say that this is a what? A bullish trend, right? Let's say that this is a bullish trend and it's trending to the what? To the upside. Let me make this one a bit thicker. Yes. So this trend here, if I'm going to say that if I'm going to map a break or structure, I'll map it from where? From here to here, right? This is where the break of structure occurred, right? Because this low here, it went on and break structure to the upside, we will say that this low is a what? It's a strong what? Low. It's a strong low because it does what? It went and break structure. I hope you guys get it. So this is now a strong low. And because this is a bullish market, with the way we trade, we are trading from strong structure and we are targeting weak structure. So because this is a strong low, when price is pulling back, or if price is pulling back, we are not expecting price to pull past or to pull back past this low because it's a strong low. It did its job. We are expecting this low to hold. So this price can pull back as much as it wants, but we are not expecting price to do what? Break that low because it's a what? It's a strong low, right? Yes. So, and how can we get a trade idea from this, right? Well, listen, since we are not expecting price to break this low here, we can get in long here, right? We can take a long tree here and target this high because this high is now a weak high. It's a weak high because it failed to take out this low, right? And we say a high's job is to take out a low, and a low's job is to take out a what? A high. So this is a what? A low. It went on and take out this what? This high. That means this low has what? Done its job. And this is what? this is also a high, right? But this high failed to what? Take out this low. So this high failed. So this high is what? A weak high, right? Because it failed to take out this low. And since this is a weak high, we want to target it because we are trading from strong structure and we are targeting what? Weak structure. I hope that one makes sense now, right? So how if like we are going or if we are going to trade this market, right? It is going to be we are going to get long here and then we are going to target this high here because it failed to take out this low here. That's how we work with the concept of strong highs and weak lows. Strong highs and lows, weak highs and lows. That's how we deal with them, right? So guys, one thing I want to make very clear is that when it comes to the concept of the strong highs and the weak lows, or strong highs and lows and weak highs and lows, right? One thing you have to understand very well is that the strong low or the strong high will always be the lowest point, right? That went on to cause the break of structure. Let me show you an example. Looking at this structure here, right? This is the price caused a break of structure where here price made a break of structure here, right? So after this break of structure, which place will be like my strong low here? The strong low is not going to be here, right? It's not going to be here. But then the lowest point that caused the break of structure, which is this one. So this one is my what? My strong low. So if I'm going to map this structure, I'll map this one as my what? My strong low. So price can pull back as much as it wants, right? Price can pull back as much as it wants, but once it does not break this low, this is still a bullish market, and the expectation is that price will still head on to the what? To the upside, right? So if you do not understand that this place is the strong low or this place is the what? Strong low, you view here as a what? A break or structure to the what? Downside, saying that maybe this trend has switched from what? Bullish to bearish, which is not actually the case. And then you end up taking a loss and you not understand the reason why that happened, right? So that's what I want to show you guys. The strong low or the strong high will always be the lowest point or the highest point that went on and what? And caused the what? Break of structure. So this one is my what? My strong low here in this structure, right? That's it. And this framework is so powerful. It makes things very easy for me. Once you are able to get your head around it, you'll be on the right side of the market far more often than what? Than not, right? So I'll just try to see if I can get one or two examples in the chat and show you guys what I'm talking about, right? So guys, here is the chart, right? You just look at one or two examples because this video is already getting as long as it's get, right? So let's just zoom in here in this section of price action and you see what I'm talking about, right? So this is a what? A clear bullish trend. It's a bullish trend because price is making a series of higher highs and higher lows. This is a higher high. This is a higher low. Higher high, higher low, higher high, higher low, higher high, right? So because this is a bullish trend, and if you are able to identify your break of structure, here is a break of what? Structure, right? This is a break of this is a break of what? Structure. So since this is a break of structure, where is the lowest point that went on and caused that break of structure, right? Is this low. So this low is our strong low. If price starts to pull back, we expect it to pull back as much as it wants, but we don't expect it to break this low, right? Because this low is a strong low. It did its job, right? It's done its job. So, and as you can clearly see, price started pulling back. Price started pulling back, but broke. It never broke this low. It stopped and it went on and break structure to the what? To the upside again. Then you ask yourself, this is another break of structure, another new range. Where is the lowest point that went on and caused that break of structure? Is this low here? So this is your strong low. Price can pull back as much as it wants, but you are not expecting it, or we are not expecting price to break this low. And that's what happened, right? Price actually what? Pulled back, and then it went on to the upside again. And this framework is so powerful. I hope you can see it. Like, it's very powerful if you get your what? Your head around it. And this is the end of the video, guys, because this video is already getting too long as it, and I'm actually making it a long video because I feel like it's an educational video, and I wanted to bring in everything that I'm supposed to cover, so that it will make you understand what I'm trying to tell you, right? And I'll end this video by saying that I've got another account that I'm going to be tracking here with you guys again, and bought a 6K account the other day. Let me just quickly show you the account. I've not taken any trade in it and all that. So here is that account. It's a 4 traders account, right? And it's a 6K account. So it's a promo. I got this 6K account for $9.99, right? And it's a phase 1 account. It's a step 1, phase 1. So there's no phase 2 and all that. And if I'm able to pass this account, fine. And if I blow it too, fine. But at least I now know that I have an account here to track with you guys, right? So this is just my welcome back video, and I hope you guys really enjoyed the video. Please help me smash that like button, subscribe to the channel, so that whenever I drop a new video, you'll be able to see, right? And without any further ado, cheers guys.